What's going on, you guys? Thank you so much for opening this video. This is Trading with Saisha. Welcome back to the channel. If you're new, please hit the subscribe button, like the video, and follow me on Instagram. So in today's video, I am showing you guys how I analyzed for CPI as well as FOMC. And I was obviously trading NASDAQ and US 30. And right here on the screen, I'm sure you can see both analysis for US 30 as well as NASDAQ. So it all went as planned. The market followed the setup and, setup completed due to CPI. With FOMC, I traded NASDAQ, and I'm going to show you guys how I analyzed for both news events and how, both setups were successful. So let's get into it. Okay, so let's analyze NASDAQ. And the first analysis that I'm going to do is the analysis for CPI, right? And then we'll end with the analysis for FOMC. This is the move that CPI created with this bullish candlestick right here. And so I've highlighted that just so that you understand why I was able, or how I was able to get this buy, right? Or this direction. So I'm going to start on the weekly time frame. On the weekly time frame, I'm really just looking for important price levels. I'm looking for zones, areas where the market was rejecting the most. And I'm just going to place a few here. This is important because when you are trading indices, a perfect entry is very, very important, right? So that you don't face major drawdowns or you don't lose money potentially, right? So these are price levels that I was able to configure, price levels that I was able to see while analyzing. And so another thing was the trend line, right? The trend line. So with CPI, the market wasn't yet still here, right? The market reached here because of CPI, okay? On this third touch right here, the market reached here because of CPI. So we'll just drag the trend line like this. And obviously, when the market is headed towards a trend line, when the market is already moving on a downtrend, you are expecting rejections here, especially on that third touch. And so that is how I was also able to find the direction for FOMC. But we'll get into that when we're analyzing for FOMC. Now let's focus on CPI. Okay, so let's go here to the 4-hour time frame. This is the 4-hour time frame, right? So I was able to figure out this on the weekly time frame. And of course, I might have used the daily time frame to look for some tweaks here and there. But then right now, it's just from the weekly to the 4-hour time frame. Right, when we get here to the 4-hour time frame, what I noticed was the move that had a lot of people thinking that this is now an uptrend, which wasn't, right? So this move was basically the market just creating a lower high on the weekly time frame. So it had a lot of people confused, or not even confused, but thinking that this was going to now be an uptrend. So anyways, right here we have an important price levels just because of how the market rejected so much on this price level. Let's focus right here, right? Let's just focus on what is happening here. Now, when analyzing for CPI, this price level played a major role in finding the direction, right? This price level. The way that the market moved here, it obviously created a high, and then it broke the high right here, right? This previous high was broken, and then market headed up to create a higher high. So basically now what we see is sort of like a small uptrend, right? A small uptrend within the downtrend. So that is point number one. And then secondly, how the market is failing, literally failing to break this price level, right? It has failed multiple times. And so what the market did here was whenever it broke out of that price level, it created sort of like a fake out and then pushed back within impulsively. It did that here as well, created a fake out and pushes back within impulsively. And now the direction was because of having the market create a double bottom right here. It wasn't much, you guys. It was just this double bottom on a support level. This price level was very hard to break, and so having the market push up was an easy thing for it to do. It was easy for it to just push up because this level is very hard to break. Okay, so now heading to the 1 hour time frame where I entered my trade. So what I did was I drew a trend line, and my trend line accommodated for this high right here. And I'll show you that this is also the neckline of the double bottom that we saw on the 4 hour time frame. And then right here, as I drag it, you see it, how the trend line was broken, right? So as soon as the market broke the trend line, that is where I knew that it will eventually then just push up so that it can hit the 90% rule right here. Drawing the neckline also made me realize how important the level was because of how much it has been rejected so far, right? So I knew that once the market broke out of here, it was going to push up, of which it did. Another thing that played a role in finding this direction was the small flag that I'm seeing right here. So on the 15 minutes time frame, we sort of have like a corrective structure that formed, and that would have been an amazing entry opportunity. But my entry was right here on this price level, and the market shot straight up. So that is how I was able to find this direction. Now, the reason why the market rejected here at this point right here, if you go back to the weekly time frame, you'll understand that the market was respecting the trend line that we saw on the weekly time frame. It was also respecting the price level that created the confluence on the weekly time frame, which is right here. This is why the market dropped, because of the price level and also because of the third touch of the trend line. That is why we had the market drop. So we were able to find the CPI direction mainly because of technical analysis. I did not read the fundamentals. It was just technical analysis, right? So now with FOMC, it was an easy decision because remember, this point right here is the reason why we were selling. The market pushed down impulsively. The only thing that I did was just add this flag, right? And the market respected the third touch again for this flag. And I'll show you on the 15-minute time frame. It was a perfect entry, you guys. That is how I was able to get that direction. So what the market did here was, reject on a trend line 3 times. And so as soon as the market hit that trend line for me, that is where I entered. I entered right there, and the market dropped 9 p.m. in SA, and the setup was respected. And that is how I was able to find the directions for both FOMC as well as CPI. CPI this side, FOMC right here. So let's have a look at US 30, and I'll show you guys how I analyzed US 30. It was the same thing. I did the very same thing that I did here. Okay, so this is US 30, and I only analyzed US 30 for CPI. I did not analyze for FOMC just because I was trading NASDAQ. So I did the same thing. Like I said, I went to the weekly time frame, and the price levels for US 30 was super easy, and I'm just going to place them right here, and they were very effective, right? So they were able to help me get that perfect entry, and they were easy to see, like I said. Okay, so that is what I did on the weekly time frame, and also I do have to place my trend line right here just so that I have the overall direction of the market. Okay, it's not my business where the market reverses. I will see when the market reverses. So let's go to the 4-hour time frame. Okay, when we get to the 4-hour time frame, this is how the market was. I will be placing my trend line like this. So when placing a trend line on a market that is like this, just make sure that once the trend line is violated, you respect the new lows or highs if it's a downtrend, the new lows that the market is creating especially if the lows are on the same level, because that means that the trend is still not yet broken, right? So this is how it is. As long as these lows were not broken, it means that the trend is still not broken. The trend line has to be the same as the trend, right? So it's only now that we're going to change the trend line if the market will push up and maybe form like a nice new lower high. Then we can start a new trend line, which is right here, like this, right? So just keep that in mind. All right, so this is the trend line that was placed, but before even placing the trend line to accommodate for this low, it was right here, right? Think of the trend line right here, because the move was still not yet done. When the market created a double bottom on the very same price level that is very difficult to break out of, same thing with NASDAQ, it was easy for me to see that the market will push up, right? So the market created a double bottom here. As soon as it did that, I placed my trend line like this, and then the trend line was broken, and then you have the neckline right here, and that is where the entry was. Okay, let's move to the lower time frame, the 1 hour time frame. Okay, so when we get to the 1 hour time frame, you tweak your price level. You tweak your price levels. Make sure that you accommodate for most touches. This way, you don't miss out on this. See, these type of entries or these type of entries right here. So when the market broke out and did like a small, very small retest, this is where then I was looking for those entries. And just know that because this is a double bottom right here, the market will always want to go back to that first leg of the double bottom or the double top if you see a double top. So that is what the market did with CPI. It pushed up, right? And when you are, trading these markets, just know that you have the price levels that you place are areas where you can re-enter or take profits. So if the market was pushing up nicely, so just know that the level right here was meant for a re-entry, right? So this is where CPI started, and that is why it pushed up. Okay, I don't know if you can properly see, but as soon as this price level was broken, the market retested it right here. As you can see with that tiny wick, market retested it right here, and then it shot up as soon as CPI was released. So that is how I analyzed both NASDAQ and US 30 for CPI and FOMC. Similar thing happened for US 30 with FOMC, but I did not see this because I wasn't analyzing US 30 for FOMC. I just went straight to NASDAQ to trade FOMC, which was pretty cool. So thank you so much, guys, for watching. Don't forget to subscribe, hit that like button, comment down below, and don't forget to follow me on Instagram. Thank you so much.